I am Guy Goulet, Chief Executive Officer of Cerro De Pasco Resources. Today, I'm going to present you the most recent development at Cerro De Pasco.
Guy, lovely to meet you, and thanks for joining us. We're going to have a kind of fulsome run through of the story as a whole. We'll maybe look at some of the more sort of commercial components. And I think more importantly for everyone, help us try to understand the process that you're going through and the opportunity in front of you. Because not many people understand, they understand conventional mining, but perhaps maybe not some of the things which you're looking at, some of the advantages of some of the things that you're doing. So you're going to talk us through a PowerPoint. I'm going to sort of interject at various points if I'd like some clarity. So if you don't mind, please carry on.
Okay, very good. Well, thank you for the invitation. What you see, Matthew, on the screen is the community of Cerro de Pasco. It's 4,400 meters above sea level in the Andes of Peru. It's a community, but as you can see, it's also a mine. That mine was discovered by the Spanish back in 1630, and they start operating that mine. Believe it or not, that mine has never stopped its operation since. I don't know one mine on this planet that has such a statistic. In 1906, Mr. J.P. Morgan himself made what they still call the greatest investment of the 20th century in Peru. He invested tens of millions of dollars into that project. They create at the time Cerro de Pasco Copper Corporation. They list the company on the New York Stock Exchange a few years later. The Americans have sent to Cerro de Pasco the best engineers, the best metallurgists, the best geologists, the best equipment. Cerro de Pasco became the school of all the mine on the planet. Cerro de Pasco became the cash cow of the country. Cerro de Pasco became the largest gold, copper, silver mine in the world. So they extract over the years from that pit here that you see 300 million tons. By the way, this is a usual forward-looking statement that the authorities suggest us to add to our PowerPoint presentation. I invite you to go to our website and read it. So I just mentioned to you that they have extracted so far 300 million tons out of that pit. Some of it was processed. That's what you see in white here and in orange here. So Matthew, I just mentioned to you that there was over the years 300 million tons extracted from that pit. Some of it was processed. This is what you see in white and orange here. This is 75 million tons. Some of it was stockpiled here, the shape of the heart, and other material was stockpiled in the back here. So at the very back end here, you can see the pit, and there are two flotation facilities right beside that pit that used to run 13,000 tons per day. So what I'm going to do now, please remember the shape of that heart here, partly covered with tarps. And I'm going to show you on the next slide a satellite picture. So can you see now the shape of that heart, which is now in gray blue? And what was in white, the slide before, is now in orange. So what we own, Cerro de Pasco shareholders, we own the mineral rights on these tailing and these stockpiles. So we own the mineral rights on what we expect to be the largest above ground mineral resource on the planet. So as I mentioned to you, there are two flotation facilities right beside the pit. They're still operating, belongs to Volcan. You can see one of them here called Paraksha. The pit has been shut down. Volcan still operating the oxide here into their oxide plant here. Up until 2023, Glencore used to own 80% of the shares of Volcan. I just mentioned to you they shut down that pit. So for Glencore, no more offtake no more interest. So Glencore was intent to sell Cerro De Pasco. In fact, there's only one potential buyer. It's us, since we can run those two flotation facilities for 20, 25 years with the material we've got here. So what we did late 2019, beginning of 2020, we did an intense due diligence. We sent 2 engineers and 2 geologists on site. And what we have done there, we have compiled everything that was processed from 1906, when Mr. J.P. Morgan made the investment, until 1992, when they stopped throwing the material into these tailings and they start sending the material in a modern facility here. So the compilation ended up being this. 75 million tons have been processed. There was a copper era, which was more of an underground operation, more copper, silver, gold. 16 million tons were processed. And then it overlapped in the 50s. It became more of a lead, zinc, silver mine. So our estimation, we're pretty sure about that. From the monthly report, I repeat, from 1906 until 1992. And we know also from those reports the recovery, 60%. So 2 minus 1 equals 1. So we're quite sure about what are left in these tailings, which are those 75 million tons at 1.6% copper, 1.3% lead, 2.2% zinc, an average of 2-3 ounces silver, 1.2 gram ton gold. So if you put the copper, the lead, the zinc, and the gold into silver equivalent, you end up at 423 million ounces of silver equivalent. It's $14 billion worth of metal above ground. Let's precise today. To produce base metal and precious metal, 40% of the cost is mining. There's no mining here. Question you should ask me, Matthew, why the recovery was so bad. So let's go back in time. That was the beginning of the 20th century. The grinding was not appropriate that we read in the reports. The reagents were not so good. The technology generally was not so good. But more than this, let's go back in time. It was the largest mine in the world. They were extracting from that pit every day 20,000 tons. They were processing 13,000 tons. They were stockpiling 7,000 tons. So when you do flotation, you will rapidly, in the first 24 hours, recover 60% of the material. If you keep your flotation process going for 72 hours, you will end up recovering 85 to 87% of your metals. So again, go back in time. Every morning there was 20,000 tons right beside those 2 facilities. You can recover rapidly 60%. Why should they have wait at the time an extra 48 hours to recover an extra 25%? Well, they can do 60% right away. And the next day there will be 20,000 tons. And the next day there will be 20,000. So this is why this is the richest tailings on the planet.
And how
You
much
follow
work,
me?
can I ask, Guy, before you say, how much work have you done on metallurgical recovery and even test processing so far?
So, Matthew, you know what I like in that PowerPoint presentation? Most of the questions are answered few slides further. I'll keep going on the next slide.
I hear you. That's
Okay, so we had to receive a supreme resolution to be able to drill the permit, perform 40 holes. Obviously, the community is all along with us. I repeat, there's 67,000 people living there. That mine used to employ 7,000 people at the time. Today, that mine barely employ 500 people. You tell me what you do at 4,400 meters above sea level, else than mining. There's nothing to do. So the community want this project to move forward. I was speaking with the mayor, which you see on the left there of the community, not long time ago. And he was telling me, he says, we all want our children to go to college and university in Lima. He says, we don't just have the money anymore. And he was pointing out our stockpiles and our tailings. And he was telling us, this is what will send the kids to school in Lima. So obviously the community is all behind us. We're going to create the wealth back in Cerro De Pasco. We're going to assume the cost of treating the acid water. In 20 years, there will be no more acid water since these tailings and these stockpiles will have been all reprocessed. By the way, nobody thought, beginning of the 20th century, that putting a stockpile and a tailings right in the middle of the community would attract today all the NGOs of the planet. We did not do that, but we're going to correct the situation. So we have drilled, we have received, the president have signed a supreme resolution. That was the fifth such resolution signed in Peru over the past 20 years. So we have drilled, first of all, as you can see on the left, with an impact drill. Okay, you will see what it looks like. It looks like mud like this. So we go 1 meter by 1 meter. But at some point, this impact drill has some limits. Okay, so we have to use what you see on the right, a sonic drill, because at some point, these tailings are 58 meters shadow. Okay, so as I just mentioned to you, we do 1 meter by 1 meter. We isolate the sample and we freeze the sample. Why we do that? When it comes to the lab, half of it goes for assay, half of it goes for metallurgy, coming to answer your question, okay? So why we freeze them? Because if the test is going to be made in a few weeks, well, the material will get oxidized. So we want the material as it is in situ. That's why we're freezing the sample. So far, we have performed 40 holes, okay? And so far, we are exactly where we expect to be, except we're a little bit low on copper. Copper should be 0.4, but we will recover the copper here on the second drilling campaign because the copper come more from the initial mining, which was the underground mining at the beginning of the 20th century. So the copper will increase drastically while we will drill more to the southwest.
And will the gold will that improve as well?
The gold will increase a little bit, yes.
Okay. Okay, 0.2.
So what, this is very good, by the way. It's 4.3 ounce per ton of silver equivalent. It's $170 US per ton in situ value. Okay. So
can I ask you, why do you have to start the drilling where you started it? Why is that the optimum place to start it? Why not start down where might get a little bit more gold, which is obviously the price of gold is interesting at the moment.
It's a good question, but remember the third slide. This is our permit. You remember that rectangle? We've got the mineral rights, okay? So now the government of Peru, it's very formal in Peru. You got to follow a protocol. So the government of Peru kind of say, show us the money. Show us if this, what you expect to be in these tailing are for real. So now we've shown them, okay? That was phase one. So you will see in a few slides, phase two is coming. But the government want to see the money before they give us, because there's no permit here. It belongs to the government of Peru. You will see some numbers later on in the presentation, and you will understand we'll be giving to the government of Peru 28% income tax. It's a lot of money.
Can I understand? I think some people watching the show might understand places like Mexico or Brazil, where divided between federal and state. So you're saying federal government owns this land and they get paid the tax, and then I guess they redistribute into various communities across the country, or does our local government that benefits from this as well?
No, no, no. It comes to the government. That's it. They don't give back to the community. We're going to take care of the community. Okay,
Okay.
we have agreement with the community. Let's recall there's a lot of employment there. So,
Okay.
okay, we did not expect, okay, because we asked it for base and precious metal, but we also asked it for critical elements. And suddenly we just realized we've got 53 gram per ton of gallium, and we got 20 gram per ton of indium from nowhere, unexpected. Gallium is the same price as silver today, and it's just moving up. Okay. So it's like, it's not a gimme. We'll have to extract that gallium. We'll have to make sure. But what is nice is that this 53 gram, when we analyzed the first 8 holes north here, we had an average of 23 gram per ton gallium. We had another 8 holes. We increased to 32 gram per ton of gallium. After 40 holes, we're now averaging 53.2 gram per ton of gallium, including those 2 old SPT14 and SPT15 that average 86 gram per ton of gallium. So you can see the more we go south, the more the gallium increase, the more the copper increase. So that means if we can extract the gallium, you move your in-situ value from $170 US per ton to north of $200 US per ton. $1 mining costs.
Can I just ask before we leave that slide, Guy, do you mind going back to the previous slide? With the area that the federal government owns in red, there you talk about the government will be paid 28% as a corporate tax or as a fee for letting you mine this. I mean, how's it positioned?
Corporate tax. Corporate tax.
That's
no NSR. Okay, no NSR.
No NSR.
Just we pay the tax.
Okay,
that's why Peru.
If I may, the permit which you were looking to get from the federal government, their incentive is 28% corporate tax on all revenues generated from this zone. Is there any other kind of costs to you as a company in terms of the remediation, in terms of any other aspect of starting work there? What are you liable for?
So just to correct you, not 28% on revenues, but on cash flow.
Cash flow, okay.
Before tax, okay. Yep. And that is it. This is it, okay. So at some point, you can see these tailing and these stockpiles produce acid water.
Yeah.
Okay. So over the years, we're going to reprocess the stockpile and these tailing and send this in a modern facility. So you understand that the closure cost will disappear over the years. Because today, what creates this acid water is the rain or the snow reacting with oxygen and pyrite. And with regards to the tax, I repeat, there's no NSR to pay to the government. That's why, by the way, a lot of big companies are going to Peru. If you pay your tax, you're clean. You see Barrick, Pan American Silver, Tech, the big Chinalco, the big companies are going to Peru. Pay your tax, there's no problem. Got me? With regards to gallium, just a little word here. Just want to tell you that gallium is going to replace basically the silicone chips, okay? It is essential for defense, aerospace, 5G, satellites, semiconductors, and lead production. United States produce no gallium. 98% of the gallium is produced by China. China has lately banned the exportation of gallium, germanium, and antimony to the United States, kind of part of their tech war, just for you to know. It's not a gimme, I repeat. We're not sure what we're going to do with the gallium, but just with the quantity right now, we have 4 times the amount of gallium produced and reported by China in 2024. It's like if we can recover all the gallium, we can support the planet by ourselves for 4 years. And well, just turn on the TV, you see what's going on. Recovery, not mining, is the fastest way to make the material more available, the Pentagon says. Any effort that reprocess mines daily would be ideal. If you want to start a mine of gallium, you got to find the gallium, you got to drill it, you got to do a feasibility study, you got to build a mill. Your first gram of gallium will be produced in 15 years. We've got the gallium above ground. Let's do some economics here, okay? So this slide shows like with conservative price of metals here, okay? Let's do the economics like we were going to use those 2 facilities that are neighbor to us that belongs to Volcan. Okay? They're old facilities. So assuming conservative price of metals, we do have an in-situ value at $169 US per ton. These 2 flotation facilities are old Jameson cells. Historically, they did some tests, and historically, they could recover some 41.5% of the metals. So let's assume 40%. There will be treatment and refining charge that will average 28%. That means NSR per ton will end up at $49 US per ton. On 75 million tons, it's $2.9 billion US profit on life of mine. At 10,000 tons per day, as those 2 flotation do at the moment, it's $140 million US per year profit. Okay? So we're trading, by the way, at 150 million market cap Canadian. Do the calculation you want. So now let's assume we can recover the gallium and we built our own plant. So we had the gallium, we had the indium, the NSR, the in-situ value will move up to close to $200 US per ton, but the recovery will be 70%. All modern facility in Peru built after 2012 are recovering north of 70%. So let's assume the basic 70%. Treatment and refining charge will be the same, 28%. That means our NSR per ton will now be $100 US per ton. On 75 million tons, it's $6.3 billion US profit life of mine. At 20,000 tons per day, it's $610 million US profit per year. Matthew, we're trading at 150 million Canadian market cap. So the reality will be in between 140 million and 610 million. We will be somewhere there.
Okay, so you've got to go through an exercise of working out how you optimize the recovery of gallium. You feel you'll be able to recover some gallium, but you don't know how much at this stage. So what work are you doing to try and understand that better?
I told you I like that presentation because
You've done it again.
most of the answers are answered in the next slide.
Okay.
So what we have done so far, I will tell you the catalyst. We've done phase 1 drill holes, the 40 holes. Okay. First of all, you got to do the mineralogy before you do the metallurgy. Why? You got to know where the silver is, where the gallium is. Is the gallium with the topaz? Is the gallium associated with the galena? Is the silver in the porous pyrite? Is the silver in the pyrite? You got to do those mineralogical tests. So we're doing that in Sweden right now in a university. Okay, results coming in the next 1 or 2 weeks. Okay, so then we've sent material. We've sent material in Germany. We have sent material in Peru. We've sent material in Canada at Lakefield to do the metallurgical studies. Okay, so we'll give them scope and they're going to do some tests and we're going to see what we can get. We're doing that now. So there's no pressure. Okay, we have started kind of the feasibility study. We know that the 40 holes here, the 60 holes that we're going to drill are going to be the same as what we got. Because so far, the 40 holes were all the same. From the top to the bottom, it's 1.5 to 2.5 ounce per ton silver. It's no brainer. And 4.3 gram per ton ounce silver equivalent. So it's all the same. Okay. So, so let's do those tests. We got all the ingredients. We've got money at the moment. We've got a lot. We've got $16 million. We can go right to the end of that feasibility study. But what you have to make I want you to understand is every percentage of recovery we're going to get 71 or 72 or 73, like it represents tens of millions of dollars profit on life of mine. You understand? Every percentage is tens of millions of dollars. So, as my wife says, when you do a spaghetti sauce, it takes time to cook 6, 8 hours. Let's take the time. If we do things properly, this is a winner. This company is a big winner here. So next step, also, we're formalizing the claim for the surrounding tailings. We should get that in probably, I would say, 4 to 6 weeks. And we're doing all those studies, geotechnical, hydrogeology, hydrology. We have to do impact environmental study, infrastructure. There's a lot to do. There's a lot moving on in this company now. So next step, we're going to get a listing on the Lima Stock Exchange, probably within the next month. Okay, we're going to announce the Supreme Decree to do the second phase of drilling, and at some point, what's going to help? This will come probably in 2, 3 months. Results of metallurgy. Then the analysts will recommend us. An analyst always wants to cover himself. If the metallurgy, he prefer to recommend the company at a higher price. He's not going to take the chance if the metallurgy doesn't work. But Matthew, as I mentioned to you, at 40%, we expect to do $140 million US profit a year.
Okay. Can we spend a bit more time? I'm frightened to ask the next question because you'll tell me it's on the next slide. Which is there's no mining risk because all of this is already above ground. We're not going underground trying to find it, spending a lot of money trying to find it or make discoveries, etc. This is all sitting at surface. You're drilling the holes. It's consistent in 1.5%, 2.5%. So 1.5 and 2.5 are silver. What are the risks? We've talked about mineralogical, metallurgical, and the kind of the recovery process, but what else is dangerous for you? What can stop this from working?
So what could not make us sleep at night? This is a question you're asking me, eh? So junior mining companies, you can run out of money. Okay. So we've got right now $16 million at the bank. And we got, as the main shareholder of the company, he owns close to 20% of the shares, Eric Sprott. Okay, so it might be difficult here to run out of money. This is number one. Okay. The other thing that can happen is problem with the communities. And in that case, I explained it before. Okay, there will be no problem with the communities. And the real risk is the metallurgy.
Okay.
Okay. But as I mentioned to you, if we use the old Jameson cell, we still can recover 40%. If we recover 20%, we will make money out of this mine still. Okay. So that project is in a position right now where way better than we were 2 years ago with no permitting, no drill, no money, a lot of debt because we had the other mine, Santander. So that company have changed totally.
Okay. Okay.
Okay. So this is what you see in orange are the tailings. Okay. They are naturally saturated with water. So if you do an excavation, it's naturally going to fill up with water. So what we're going to do, we're going to sink those slurry pump, and we're going to create slurry, and we're going to pump the slurry either to the neighbor facility or either to the facility we're going to build. Okay, so this, you can see here, we're going to do slurry and pump the slurry day and night, 10,000 tons per day per pump. Something I want to mention to you, historically, that mine was operated very aggressively. It was a machine to print money at the time. So they were printing a lot of money. So there was 24 hours a day, dynamite, trucking, dust, noise. So Matthew, this will be the community of Cerro de Pasco in 25 years.
Very nice.
It's a little bit of a corporate year. We've been trading okay. We've got, as I mentioned to you, market cap of $1 billion Canadian. Shares were trading well. There's 500 million shares outstanding. Management, Eric Sprott, and 3 institutions own more than 40% of the shares. So in fact, the float is around 60%. So when we start announcing drill holes, you can see there's some resistance. We're trading today at 32, 33 cents, okay? The one thing that's happening, we've got those warrants expiring on June the 25th, okay? That creates naturally a little bit of resistance. Volume is good, like it's 1 to 3 million shares trade every day. But when those warrants will be gone, I think the pressure will be gone also. Any question on the share structure or?
No, it's pretty evident. Who are the other, apart from Eric? I mean, institutionally, are you well held at the moment?
Well, we've got 3 of them. Generally, when they get in, they prefer to keep the confidentiality.
Okay. Okay. And are they North American or South American, or where do they come from?
We've got 2 North American, 1 Swiss.
Okay. Okay.
Okay. And well, you see also the warrants, it seems to have a lot of warrants, but a lot of them are at 50 cents. And the ones that are at 15 and 20 cents, most of them are in the back pocket of Eric Sprott.
Okay.
So Eric does not need to sell shares to exercise.
Okay.
Okay.
And
Our board.
and then just obviously, I said at the beginning, it's like, conventional mining is, I guess, well understood, but this sort of processing of tailings, there's very few companies that do it, but those who do it seem to do quite well. One, why do you think more people don't do it? And two, do you think investors understand the kind of risk profile and, more importantly, the margin opportunity available if you get it right?
Well, for one reason, Cerro de Pasco is one of them. Why it's not that much known. It's just because reprocessing tailings just started after 2012. Why? The price of metals were too low. Today, everybody's thinking about reprocessing tailings. Why? No underground, no flooding, no loose block, less accident, no pumping, less pumping. Reprocessing tailings easy.
Oh, well, because it's easy. Why isn't everyone else doing it? That's the old cliche, isn't it? So
No, more
it's a
and
lost
more are
art.
doing it. More and more are doing it.
Right.
The nice thing about this one is we can even call us not a mining project, it's a rehabilitation project. So that project has so many winning conditions, I repeat, create wealth into the community of Cerro de Pasco, taking care of the acid water, cleaning up the area, no more acid water in 20 years. Big paycheck to the government of Peru. We might produce sulfuric acid from the pyrite. Peru desperately needs sulfuric acid to produce fertilizer. There's many, many things we can do also with the pyrite.
Okay.
So among the people you might know, John Carr has done a New Century Resource. was a great success retailing, reprocessing tailing a few years ago. That's about us, Matthew.
I think it's quite interesting. I do think it's very interesting. And how long the process that you're kind of going through at the moment in terms of mineralogy and and everything else that you've got lined up now. When do you get to the point where you kind of lay out some economics for us? Because the interesting thing for me is, 40% of the cost of mining is the actual getting it out of the ground bed. It suggests that the potential for a kind of high margin project here, 140 to 610, or somewhere in between. That's very, very appealing, but maybe I don't think anyone's got it yet. So the de-risking bit that you're going through at the moment, do you think that's going to take you long? And how are you going to show that to the marketplace? And obviously, will the funding be there for you to kind of start the process, the capex?
So to answer precisely your question, it will be Q2 or Q3 2026 when we'll be able to put a number, okay? And then we'll decide if we're going to use the neighbor facility or we're going to build our own plant.
Yep.
Okay. By the way, building our own plant, it's going to cost us in between 150 and 200 million if we use Chinese equipment, and it can go up to 350 and 400 million if we use German engineering and equipment. But you saw those numbers, eh? PIX, it will be repaid within the first year. I was walking at the PDAC, the PDAC, the big convention in Toronto. I was walking all the alleys. Matthew, there's no project like this one. It does not exist.
No, well, it's. I think it's quite appealing. Like we do have other tailings reprocessors come on here, and they are making money hand over fist at the moment. And it is a relatively, as you've demonstrated, I thought that animated illustration is quite interesting. It seems rather simplistic in terms of that. All you're doing is kind of creating a slurry, pumping it up, whatever is 1.5 kilometers away, and to process this with some pretty high grades as well. So I'm trying to find fault with it. Believe me, I'm trying to work out where this thing falls over.
Yeah.
But
Well, it's more complicated than just pumping like that. Okay, the pH, it's more complicated.
okay.
Okay, we show it looks easy, but there's a lot of metallurgy, chemistry in there. That's what we're studying right now. The team is good, the spirit is good, we've got the money to do this. Just let's do things properly. It takes that time. It will take a year. But anyway, people, like a lot of shareholders calling me, when are you going to start production? When are you going to start production? It will take a lot of time. But the stock, when we start production, the stock will start moving up. It will stabilize, and people will wait for our quarterly report.
Right, but I'm just thinking of sort of conventional mining again, because that's the reference point. Most people will be looking, the lens people will be looking through, which is, doing tests at lab scale versus pilot versus commercial. That usually takes, a fair bit of time. So, okay, Q1, Q2, 2026, we're kind of getting some economics around this thing. Then what? Then how long do we need to wait for the next phase before you can get to an FID? What's the
So
process?
Matthew, Q2, Q3 instead of Q1, Q2.
Okay, yep.
So if we build it, it's going to take 2 years.
Right. But
We
there's no
can always
interim
use
test.
that.
There's no interim test at some sort of pilot level. This is once you've decided once you've kind of got these numbers back in Q2, Q3 next year, you understand the economics around it. You feel that the kind of simplicity of it means that you can get on with a kind of the FID and then start the process of, I don't know how you're going to build this thing, but building it over a 2-year time frame, something like this, and ramp it up from there. I'm trying to work out where you can enter the market in terms of commercially.
So with that, this is what's going to move the market cap up. It's when we finish that feasibility study. You end up with just have to build or you get bought but when you get that NPV, this is where the market will pay. And this is going to happen sometime in 26.
Okay. Okay.
Okay.
So lots to do between now and then. So I guess lots of news from you. Again, just help us because it's not conventional. So we're doing phase one of drilling. We've got 40 holes. We're again then going to do more drilling. I mean, what are
Yeah,
we?
phase two, we're going to announce phase two. This will be a milestone. Okay,
Okay.
it's coming, and the drilling is easy. We're pretty sure about the results that we're expecting the results. Okay,
Right.
and then there will be a metallurgical test will come
And
until
as
the
I
end
say,
of
you've got
2025.
you've got money in the bank. This is not deep drilling. This is all sitting at surface. It's regular, standard, shallow
Yeah,
drilling, effectively.
yeah.
But you're not spending a lot of money to do this. Okay.
Well, we're spending with all those studies, we're spending money. In fact, we're not spending, we're investing money, but we're okay financially. I've been doing that for 40 years.
Mm,
Meetings after meetings in Toronto and London and Zurich. 99% of the time I was going in a meeting was to raise money. Today we're going to Toronto, we're going, Steven Zatka and I, they ask, you need money? The answer, it's a good satisfaction. Let's touch wood.
yeah.
Let's be so
Okay.
this is us at Matthew.
No, it's interesting, Guy. Very interesting indeed. I liked it when we spoke at PDAC. The kind of simplicity of it, it appeals to me. I appreciate there's a deeper chemistry required, but the simplicity of the business model is interesting. I guess the proximity to a decision to move in a kind of commercial revenue generating phase is appreciated too. And I guess the kind of state of the metals market at the moment in terms of the margins, it really helps for sure. Like I appreciate you kind of running through the outline of that for us. Maybe we can come back on and maybe we can get into the weeds or around it, so we can help us understand the chemistry set as it were, mineralogy, metallurgical endeavors, etc. So appreciate your time today. Thank you.
Okay, it was good to have this interview. Thank you very much, Matthew.